Hi, I'm Thomas Yeagle, VP Market Development for S&P Capital IQ, and I'm here today with my colleague Silvina Aldeco-Martinez to highlight some of the headlines from the 5th edition of Credit Market Pulse. With the focus on Southern Europe, overall findings in this issue indicate that despite recent improvements, hot spots of high credit risk still remain in Southern Europe, namely Greece, Spain, Italy, and Portugal. These credit risk trends are displayed in our new heat map, which gives you a visual representation of the median probability of default score for all non-financial corporations in the region. You will also clearly see that the Ukraine stands out as a European country with the highest PD levels. On the positive front, Ireland has recovered remarkably to the lowest risk category 4 years after its bailout. Silvina?
Yes, thank you, Thomas. The end of September also saw the UK torn in the impending decision around the Scottish referendum. This prompted us to look more closely at the comparative credit quality among Scotland and the rest of the UK countries, excluding obviously Scotland. As of the last trading day in August, the average credit quality of Scottish companies was marginally better than its UK peers, reaching a median MAP credit score of BBB+, one notch higher than the quantitatively derived scores for the rest of the UK. The larger divergences at the industry level were observed in the energy sector, where Scottish companies averaged 0.05% probability of default, notably better than their counterparts in the UK at 0.28%. On the other end of the spectrum, financial industry companies appeared more robust in the countries of the UK, excluding Scotland, with comparative quantitative scores of BB+ versus BBB. Over to you, Thomas.
Thanks. On the macro front, we see a striking alignment between corporate credit risk levels and sovereign ratings for troubled Southern European countries. The median credit risk scores of large non-financials and financials either match or are just one notch off the sovereign rating of their domestic market. Our analysis indicated that as of the end of August, credit risk in Greece remained very high, with a median one-year PD of 5.29%. Our model predicts that on average, 6 of 114 large companies within Greece will default over the next 12 months. Similarly, Portuguese companies exhibited the greatest volatility as their median PD levels more than doubled from 0.57% to 1.26% over the last 3 months. However, these levels remain well below historical highs of more than 8% in early 2012.
That's really interesting. Yeah, thank you, Thomas. Moving into the signals broadcasted by capital markets, our analysis of the S&P Euro 350 index showed that the telecom dialed the highest risk level with a 0.52% probability of defaults as of August 29. Digging deeper, we saw that the sector credit risk dropped significantly from the 0.8% in mid-June and 1.5% in mid-April. The drop appears to be largely due to a PD drop of 2.96% to 0.70% for Vodafone, which is the largest weighted telecom constituent in the index. Things would actually have been much better for the sector had Portugal Telecom not jumped to a probability of default of 44.5%, though it contributed only to 28% of the sector overall credit risk due to the relatively smaller representation. On the flip side, we see good news for European healthcare, with the sector showing the lowest overall probability of default in the Euro 350 at 0.01% probability.
Wow, that's low. Finally, taking a look at the global trends from this report, another unique story unfolded. For the first time since we began publishing this report in November of 2013, Western European regional aggregate credit risk levels are higher than those of APAC Mature. At the time of publication, North America displayed the lowest overall probability of default at 0.02%. APAC Mature placed second with aggregate PD scores of 0.06%, and finally Western Europe with a median PD of 0.11%. Thank you for joining us. If you would like to read more on all the topics we've discussed today, please download the full report at www.spcapitaliq-credit.com. Thanks.